Hello and welcome to another video update on Bitcoin. Today we want to do something a little bit different. What we talked about here on this channel before is all about Elliott Wave structures and Fibonacci and EMAs and moving averages and everything. Basically we use Elliott Wave for precision together with Fibonacci structures to identify the market direction, and then we can use additional indicators like the RSI, the MACD, and moving averages, let's say for context and for like as additional parameters. Yeah, it's always important not to add too much noise, but there are some selected, let's say, moving averages or indicators, oscillators that I like to use. But what we want to do today, we will take a look at the death cross. The death cross, you might have heard about it, that's coming. And I will just open a new Bitcoin chart here. And we want to talk a little bit about that, the death cross. I saw a lot of comments on social media about that. So I thought, isn't that an amazing educational topic, the death cross for Bitcoin? So we have to go to the daily chart here on the Bitcoin chart. And for those of you who are not familiar with it, I mean, it's a great topic for social media, with the death cross, If we add the moving average indicator here twice to our, you could say, trading view dashboard, our Bitcoin chart. It has to be the simple moving average twice, not the smooth ones. So we'll delete that. But we want to have just the simple SMA, the simple moving average. That is what is typically based on. So, and then what we'd like to do is, or we have to do is, first of all, we have to make sure we are on the daily chart. We are. And then we need to add the 50-day moving average. Okay, we can change the color a bit. Let's make it maybe orange, make it a little larger. So we've got the 50-day setup. Now we set the 200-day up, and that might be white, for example, or blue is maybe easier to see. And we have to select 200. So we have two moving averages, and the cross is then the death cross. Basically, if the shorter time frame moving average crosses below the larger time frame moving average. And this could happen somewhere here around 110,500. Now you'll read all about it. People are scared, But honestly, this is a super lagging indicator. And in my experience, it doesn't work really well on the Bitcoin chart. It might work a little bit better when it comes to asset classes that are not so volatile. But it isn't, Bitcoin, I just want to put it into perspective. I mean, it doesn't make sense to show you something and then say it doesn't work. It's educational. So I want to make sure everybody understands that it is not the most reliable indicator, that there's a lot of panic that's created online. I think most people have understood it these days, that the death cross is really not really a bearish signal necessarily. I mean, is it necessarily bullish? I don't know. We're going to take a look at that and discover that together. But I can tell you that moving averages are lagging anyway, right? So what I like to use them for example, is for support. Because they can act as real-time support in the here and now. A cross always comes, it's more like a psychological tool, and it's very late, it's very lagging. What does it actually mean, the death cross? It means that the shorter time frame moving average crosses below the larger time frame. That happens when, for example, we've moved up, right? And then suddenly the direction of the trend changes, right? And the price breaks below the shorter time frame moving average one, and then this moving average starts to come down, but the slower one is still grinding higher, And so at some point there will be that cross. But that cross could come when the price is already oversold, and is already starting to move up again. And this often happens with volatile asset classes. These crosses are super lagging, You might get a better signal in when it comes to some stocks that are not so volatile, but Bitcoin often changes its mind so frequently and gets oversold so quickly that those crosses, they basically come way too late on these time frames. On a chart like Bitcoin, you need faster signals. Yeah, you can't wait for a death cross. Yeah, because, and I'm not just telling you that, it is what it is. Look, let's just take a look at the last few. This was a death cross in April. Buy signal. Okay, buy signal. I mean, of course, there was the death cross and then the so-called golden cross. Moved the other way around again. Okay, so it first crossed bearish, and then it crossed bullish again. So if we talk about the bearish cross, right, that was here. And the bullish cross was here. So was there a breakdown when the death cross happened? It was here. Was there a breakdown? Nah, it marked the exact low. Guys, it marked the perfect low. All right, just saying. Okay, what else? Did we have a death cross before? Yep. Where was it? Here. Gosh, wasn't that the low as well? Yeah, it was the low. It's a joke, I can tell you that. People who try to scare you because of the death cross, they just do it for clicks. And actually here, we were then starting to move up again. So actually, what you could say in an uptrend, the death cross is not necessarily the buy signal. Well, it might be, but the more reliable one, based on what we see here in the last two instances, is the golden cross after the death cross. If that happens, yeah, that could be interesting. But honestly, then the price has already moved so much. Yeah, it's not necessarily the... So actually the death cross is the buy signal, or would have been the buy signal here. Yeah. But hey, again, it needs to be done with structure. So if we have a macro signal like that, we would then need to take a look at price structures on the micro degree to see, okay, hey, we've got a death cross. People are panicking. I don't think too many people are anymore. This was a thing in the past, like, but you still see people posting about it. So I hate it when people get like, a lot of people do this just for clicks, and they just do it to make other people insecure, right, and emotional, and all. It's just horrible. Okay, so the next one here was also, that was in 2023, same thing. We had a golden cross after the death cross, and that combination was really a good indicator here that we want to go higher. But can you actually see that after every golden cross, or even death cross golden cross combination here, this was a strong rally. That was a bit weaker. Ooh, this was even weaker. Do you see that we're getting to the end of the cycle because we're getting exhausted? All right, and then we had a golden cross here in 2023. Hey, where was the death cross? Well, this was the death cross in January 22. You could argue that this marked actually the beginning of the bear market, yeah, but it was still late. It was still late. Here it was 43K. It didn't occur until the price actually broke below 43K. That was late. I remember we called the bear market back in November 21. I mean, this year was in June 21. This wasn't even the bear market. This was the bear market start. But in January 22, it was late, 48K. We called it in November already, December. For those of you who know it, you were here. A lot of you were here on our main channel where we used Elliott Wave. In fact, this would have given you a lot of false signals here. Yeah, death cross, golden cross, death cross, right? Which one do we believe? That's the thing. Is it really at some point it will work for sure. At some point it will work, but had you listened to this death cross, I sell it all. No, you wouldn't have been very lucky there, and also here not, and here not. And I mean, surely at some point it'll probably work. If there is no golden cross after the death cross, not good. Yeah. Not good. That'll mean bear market at some point. So, but do we need the death cross for that? Can't we just use the 55-week exponential moving average and Elliott waves that we use anyway? Probably. Yeah, probably. I mean, for the larger cycles, I guess but again, it's super late. Look at this one. There was a death cross in March 2018. But when the bear market started? In December 2017, and the price had already fallen a whopping 52% before the death cross even came. And yeah, I mean, it fell further, for sure. It fell further. There was another 67% decline. So worked well. Then you had a golden cross again. This again, too much chop here. Yeah. So you get lots of false signals with this, I think. The bottom line is it's just very late usually. It's just very late. I guess if I look at it like that, right? In the beginning, when Bitcoin was really moving in hype phases, yeah, in hype phases, it worked out quite well. Okay. So you had like after the first run of Bitcoin, you had a death cross, and then price went into bear market. And then you had the golden cross, and it led Bitcoin into new highs. Yeah. Then you had a death cross, which worked quite well into the next bear market. Then you had a golden cross, and there were no crosses in this entire bull run into the 2018 highs. So, but that only works when the market is really grinding impulsively and very aggressively. But you see in this cycle, and we always have to check if indicators stop working, and in this cycle, the death cross was just useless. It was, yeah. So this is always death cross, death cross, death cross. You could say it predicted another rally. So could it happen again? For sure, yeah. So I'm just saying here for this cycle, at some point the death cross will probably work because at some point Bitcoin will break, but then it hasn't worked the last 3 times. So do I believe it this time? I think it is much more reliable to use Fibonacci, Elliott Wave, and the indicators that we talked about before, yeah, than the death cross. It's certainly something to check, to watch for. I mean, there are some signals, like the MACD on the monthly, that is about to flip bearish. Yeah, we talked about that on the monthly. But if you look at it like this, if we talk about distance of the corrections, I mean, this was like 35%, sort of roughly 35% as well. We now have only like 22, 23% of a correction, and we have a death cross again. And the last few times when the death cross came, it actually marked the lows. Yeah, the last 3 times in this cycle. At some point, it will work. At some point, the market will just continue to dip. But then we will recognize that with Elliott waves anyway. So it's not something that is blowing me away in terms of its predictive power here, rather quite the opposite. So just wanted to help you understand that the death cross in previous cycles might have been more reliable than in this cycle, just because the momentum isn't there so much in this cycle. Yeah. And so because of the low momentum that we had, it wasn't a very exciting cycle, I would say. Because of the lower momentum and the lower returns and the less impulse, it's still an impulse. Bitcoin is still moving in impulses, but the hype phase isn't like there anymore. It works quite well apparently in third wave. So from an Elliott wave point of view, these rallies were third waves. What we're dealing with here is a fifth wave. So it can work in a fifth wave, right? It can work in a fifth wave, but it can work in a third wave. In a fifth wave, you just don't have that hype phase, and then you get more false signals. So I think for this cycle, not so useful as an indicator. I think the indicators that we talked about in previous videos are more helpful, but I think it's still an important video to make sure everybody understands that the death cross so far in this cycle, it hasn't really been a sell signal. Okay, as long as you can understand that and that at some point it will work, you can manage your risk properly. Hope you enjoyed the update. Thanks so much. Bye-bye.